Federal Reserve is widely expected to raise interest rates for a third time this year at the end of their two-day meeting, which wraps up today. Greg McBride is chief financial analyst at Bankrate.com. Greg, good morning.
Good morning, Lauren. Thanks for having me.
We've seen, if you include an interest rate increase that we might get today, 5 hikes in 2 years' time. That's relatively slow. What has the effect been on small business?
Well, I think it's the cumulative effect that we're going to have to start paying attention to. As you noted, it's going to be the 5th rate hike in the last 2 years. And the Fed, I think, will clearly send the signal that there's more to come in 2018. So while the impact of one single quarter-point interest rate hike like we'll see today is pretty inconsequential, it's that cumulative effect over time that does start to build.
When we hear from the Fed and they start to redo their economic forecasts, do you think they might amp up? A Wall Street Journal survey says that they are slated for 3 interest rate increases next year. Do you think if we get tax reform and the economy hopefully grows even faster, we're going to see even more interest rate hikes? And how would that affect small business?
Well, that's certainly possible. And I think, the way the dominoes could fall is if we get some certainty with regard to the tax legislation. If that does lead to faster economic growth and or higher inflation, those are the type of factors that could cause the Fed to be more aggressive with interest rates in 2018. And so that's only going to add to that cumulative effect. I don't think that the rising interest rates, it's not that that's fully offsets all the benefits of tax reform to small businesses, but it is going to be a little bit of a headwind, particularly at a time when more businesses are willing to take the risk and borrow money. That borrowing cost is going to be a little bit higher.
Right, and let's speak about tax reform right now. We have the first formal meeting, if you will, the first public session today of the conference committee to talk about this tax bill, and we're learning some of the details of it. A corporate tax rate of 21%, a top individual rate of 37%. Can you talk to me about what is going on and your expectations for the pass-through rate for the small business owners that pay on their individual taxes?
That one's a bit of a political football. And so I think, if there's, one provision, I think that's subject to revision in committee, I think that one's going to be it. I think the, widespread recognition that we are going to get a much lower corporate tax rate. And that will certainly benefit, those small businesses that pay on those corporate taxes. And then, the other thing is that small businesses, unlike large corporations, which are more likely to take that windfall and do share buybacks, increase dividends, small businesses are more likely to take that windfall and do things like expand their hiring, expand their product lines, grow production, those kind of things. So you're going to see a more direct correlation to growing the business and investing in the economy.
Greg, if President Trump called you on the phone today and said, what do you want to hear? What would make things better for small businesses? What would you say?
Well, I think just clarity. I think, there's the optimism of small businesses is off the charts right now. You've got a favorable economic environment. Interest rates, although rising, are still low. So I think a lot of businesses really just looking for clarity and the ability to pass along higher prices to their customers.
I hope you get that for Christmas, Greg. Good to see you. Thank you.
Thanks for having me.